IVM.
BQ Big Decisions, the BloombergQuint podcast that helps you make the right financial choices. In personal finance, if there's one thing that can be called the elephant in the room, it's insurance. It's meant to provide for you in the event of things that you don't want to happen. Serious illness, accidents, even death. Most people shy away from thinking about these things. So it's not much of a surprise that most people in India don't have life insurance or sufficient health insurance, and most certainly not accident and disability insurance. The one type of insurance that a lot of people have is motor insurance, and that's because it's compulsory. This is BQ Big Decisions, and I'm Alex Matthew. On this podcast, we're going to deal with the concept of insurance, the types of insurance that you need, and the reasons why you need them. I'm joined now by certified financial planner Harshvardhan Roongta of Roongta Securities. Thanks so much for joining us again, Harsh.
Thanks, Alex.
On our first conversation, Harsh, you pointed out something that I thought was very striking. You said that experts normally advise postponing expenses in favor of investing. But you advise people to postpone even investments in favor of buying insurance. Let's first talk about the concept of insurance. Should you treat it as an expense, purely as an expense, and something you really don't want to come to pass, so money gone is good?
So, well, Alex, when you talk about insurance essentially is a mechanism so that you can transfer all the risks that you have, the financial risk on certain events, to somebody else. So let's understand in simple words. So whether it's a cost or an investment, it's really onto the perception of the individual.
Right.
I would say this is a basic necessity. Whether you like it or not, you should have adequate insurance and the right form of insurance.
Right.
So it's very simple. If you are susceptible to certain financial losses because of happening of a certain event, you must insure it to make sure that the impact of that event does not drain your finances completely.
Right.
So, Mediclaim, for instance, I mean, moment you're hospitalized, there is a huge bill that you can run up.
Yeah.
Either you finance it yourself or get it financed through a policy.
Correct.
So the idea is, why would you not then buy an insurance policy so that your existing finances do not get strained?
And the point there is that the costs in this sector, in the healthcare sector, are rising exponentially. In certain markets, it's becoming compulsory to have health insurance.
Absolutely.
We're still a far way away from that, but it's still a good idea to have it, right?
Now, imagine a situation if there was a health emergency in your family and there's a loved one who needs to be hospitalized for treatment, and you don't have the money.
You absolutely want, and it's not easy to talk about this, Harsh. Let's put it out there right at the start.
It's not easy to talk. Imagine if you have to go through this.
Absolutely. I mean, I have personally been in a situation where I've been in hospital and I've seen ambulances outside, because the first thing that most hospitals, private hospitals, will ask you for is a deposit.
Absolutely.
And if you don't have that money upfront or a policy that will take care of a cashless admission, then you're in trouble.
That's exactly why I mentioned that delay investments if the need be, but do not delay insurance.
All right, Harsh, but in the first conversation we had, you pointed out that there are 4 insurance types or products that every individual needs to have. What are they?
So the first one would be a life insurance. Then would be health insurance, which is Mediclaim. Then there would be disability insurance that you will have to take. Disability due to accident or due to illness.
Okay.
So these are the 4 kinds of policies that individuals would need to have it in their portfolios.
All right, so those are the 4 insurance types. But let's go a little more into detail, and let's talk about life insurance first. The major problem that at least I see in this is that there is a multitude of products to choose from. And what a lot of people talk about is the return that you get in an insurance product, which always confuses me. And every financial planner that I've spoken to, Harsh, you included, point out that the only thing you need is term insurance. Why do you say that? And what do you have to say about life insurance?
So, well, Alex, it's very simple. I mean, look at it. Take an example. If a person is, earning a 50,000 rupees a month, The primary objective is that if he or she is not alive, and how does that family get 50,000 rupees a month?
Right.
So if I take an example, now if you had a crore of rupees lying in a bank account, generating a return of 6%, that is 6 lakhs a year, which is 50,000 rupees a month. So a family needs to protect their income to the extent of 50,000. So it's very simple to say, if you have a 1 crore bank deposit right now, you're sorted. You don't need to worry.
Correct.
The question is, we don't have that 1 crore. And how do we get that 1 crore if something were to happen to the earning member of the family? So in this case, you will insure the earning member of the family for a 1 crore rupees of sum insured.
Okay.
Now, this is your requirement. You need 1 crore of insurance. Now, let's step into an insurance company and ask them which are the different kind of products you have. And I need a 1 crore insurance. Now, that doesn't change.
Right.
Now, when you look through the products, a term plan for a 30-year-old will be available at about 12 to 15,000 rupees per annum.
That's the premium that you
That's
pay.
the premium that you have to pay, which is about 12 to 15,000 rupees for a 1 crore cover.
Right.
You ask them what are the different other kind of products that you have. So will be a savings-oriented policy, an investment-oriented policy.
Right.
You still need 1 crore.
Yeah.
So if you buy
that number doesn't change.
That number does not change. So now if you're buying a 1 crore policy, which is investment-oriented, you have to pay nearly 5 to 6 lakh rupees a year. So the question then arises, are you in a position to pay 5 to 6 lakhs a year only to get a 1 crore cover? You cannot do that.
You can't. Absolutely not.
So what do you do? So most appropriate product in that sense is the 12 to 15,000 rupees that you will be able to pay.
Right.
So then you buy adequate life insurance. You buy the right amount of insurance if you buy it through a term plan.
So I've heard a couple of perspectives here, and I'm trying to understand why people choose one over the other. The point is that they say, "Arey, mera paisa ja raha hai, aise hi ja raha hai." You know, if I don't, if nothing happens to me, then I don't get that money back. That's one perspective, right? And that shouldn't be the way you think about it.
It's most certainly should not be that way. In fact, insurance, all kind of insurances are like those life jackets that you have on an aircraft.
Right.
Okay, so you have a life jacket on an aircraft, and every time that you fly, there is a demonstration given as to how you should use it.
Yes.
Are you actually praying that you have a situation where you would not like to use this?
Absolutely not.
And if once you land without having used it, do you believe that you've lost money?
No.
You paid for it and then you just didn't got to use it.
Absolutely not. So that's the point, right? People think about the money that's going. I think the other example that's given is your car. You have to pay insurance for your car, but you don't want an accident to happen, right?
Absolutely.
So at the end of the day, you're happy that you don't have an accident to worry about, and you still pay the money.
So the good part about insurance is once you bought all kind of insurances that we're talking about, at the end of the year, if something happens to you, then you say, thank God you had insurance.
Yes.
And if nothing happens to you, you still say, thank God nothing happened to me.
Okay, so that's a perfect perspective. Very quickly, you want to mention how do you determine the kind of cover that you need?
Yeah, so there are different methodologies that you can use. One is, of course, whatever you're earning today, you take an interest rate that we spoke about, the example that we spoke about.
Right.
And you just say what is the bank rate and you insure yourself for that much. Of course, that's not the most comprehensive way to go about doing this. But there are other human life values. You take up future cash flows. Then you understand you incorporate inflation into this. Then if you have liabilities, so suppose 1 crore is at 6% equivalent to 50,000 rupees. But if you have a housing loan outstanding of 50 lakh, then you rather buy an insurance of 1.5 crores.
Okay.
So that 50 lakhs can be given to the housing finance company and the house is not then encumbered with anything else.
So you basically try and project what your future cash flow is going to be, rather your future earnings are going to be, what your expenses are going to be, and basically your insurance cover should cover your future expenses and should also cover your liabilities.
Most certainly, because you do not really want to keep buying insurance every 2 years in your life.
Absolutely.
So another simple methodology is that there is a maximum allowed as per whatever you're earning today.
Right.
So rather take that today itself. I mean, given the costs are insignificant, you rather buy whatever maximum is permissible as per your current income. So it covers the future, considerable amount of future income as well.
All right. Let's talk about health insurance now. And we will delve a little more into detail of life insurance at a later date. I want to spend a good amount of time speaking about that. For now, let's turn to health insurance. Now, this is something, again, that has a lot of debate, right? You say that you're covered by your company or the policy that you have with your company. A lot of people say, I don't need another one. What do you have to say with regard to that?
So, everything that you're getting through an employer in the form of insurance should be taken as a bonus.
Okay.
That cannot form a part of your basic planning.
Okay.
The reason being because you may shift your company. You may be working for an X company today. You may go to an unorganized sector tomorrow.
Right.
Even if you go to an organized sector, okay, there will be a time when you will retire. So at one point, so some people do argue that in all my life I'm going to be within organized sector. So either one employer or the other, I'm getting covered.
Correct.
So one, there is of course restriction on the cover that you have. The other is post 60, post retirement. You're not going to be employed by anybody.
Okay. Yeah, absolutely.
Now, at that point in time, then you have to fend for yourself. Now, if you go to buy a policy for yourself beyond 60 years of age, there is a possibility you may not get insurance.
Yeah, and it's even if you get, it's very, very costly.
So the idea is very simple. I mean, buy an insurance today because that's a part of your basic planning. If and when you have a claim, you may choose to claim first from your employer's policy. Don't disturb the one that you have. That's fine. But please make sure that you run it parallelly. We've had cases where people have shifted from one company to another one, but there was a waiting period for 6 months in between.
Yes.
And there was a huge claim in between that
because
period.
you're effectively taking a new policy. But when you're shifting companies, the old policy lapses and the new one starts.
Naturally,
right?
yes. Yeah. But in this case, there was a waiting period for him to join the new company.
Okay. So
there was
left in the lurch.
And there was a huge claim in between that period.
Okay.
Now, who takes care of him within that 6 months? And unfortunately, there was a huge claim that came up in between.
Okay. So you're saying that you need to have health insurance independent of what the employer provides. There's also products like a top-up plan that you can have. What should an individual that is working, or say a couple that is working, look at with regard to health insurance?
Yep. So the question then arises as to how much insurance is sufficient.
Right.
Now, given the escalating cost of medical treatments, I mean, there is no. I mean, you really don't know how much is good enough. But in all respects, I mean, a cover of about 20 to 25 lakhs is decent enough to have because it's an annual cover, and so you can hope that I don't spend more than 20 or 25 lakhs in a year.
Right.
So how do you get this kind of a large cover? Because again, costs are going to be important.
Absolutely.
So you break this up into two parts. So the first one is a base policy that you have. So there is a main policy that you are going to approach to in case of any claim.
Right.
So that can be to the limit of about 5 lakhs. And then there is a super top-up concept wherein the other policy comes into effect only after you have spent the first 5 lakhs.
Okay.
So, and the premium for that is much lesser.
Okay.
So as a combination, you have a cover for about 25 lakhs and at a reasonably lower cost than what it would be if you were to buy a full base policy of 25 lakhs.
Fair enough.
So, thanks to the advancement in insurance and the new products that are coming in, you do have a facility to take a large cover at not a very exponentially high cost.
Okay, fair enough. All right, but there are 2 more insurance products that you want to talk about.
Yeah, so we spoke about death. We spoke about insurance, because of demise of a earning member of the family. We spoke about, medical. Now, there's another situation that what if an earning member of the family is disabled due to accident or due to illness. So life insurance in that sense, term insurance is not going to pay you because you're still alive.
Correct.
A Mediclaim takes care of only the hospitalization expenses. What after you come out of the hospital, your income has ceased to exist because you're disabled.
Correct.
So how does that 50,000 rupees a month come in from? So there is a disability insurance.
Okay.
And disability can be caused due to 2 reasons, as I said, because of an accident or because of illness.
Correct.
So there is a personal accident policy offered by General Insurance Company. There's a standalone insurance policy. If you were to buy a cover for about 1 crore of rupees in this example, in case you're permanently disabled, now permanent disability has been defined. It says loss of 2 limbs. Your hands, legs and eyes are your limbs. So any 2 limbs if you lose, you get a 1 crore rupees in your hand while you're alive. So term plan will come in post-demise. This comes in while you're alive being disabled. This money can be then used to
take care of your future expenses.
Similarly, there are, this is in case of total disability. In case of partial total disability, there's another, feature in it. The most interesting feature in this disability insurance is that in case you're temporarily disabled, which means that there is no permanent disability. If in case a person meets with an accident, just injures his spine, head, or, gets a fracture, is bedridden for 4 or 5 months or 6 months. then how do you get your income? You're not permanently disabled as well.
No.
But you're not pursuing work.
It's a temporary disability.
So this policy has a feature where there is a weekly compensation for the number of weeks that you've been disabled, temporarily disabled. So it goes up to about 20,000 rupees a week.
Okay. Oh, so that's
depending on your income, of course.
Okay.
And until 2 years, if you're temporarily disabled, which means you can't pursue work, but you need money for your day-to-day expenses.
Right.
So this policy takes care of that and gives you a weekly compensation which goes up to 20,000 rupees a week.
All right. So you've talked about the 4 types of insurance that you absolutely need to have. And I'll go back to the original point that you made with regard to the necessity of these insurance products. You said that if you have to postpone your investments and buy these insurance products. But let's grade them in terms of importance. Assuming that somebody is struggling to make these or buy these policies, how would you grade them?
So quite honestly, the cost to insure yourself with all these policies is not much. You could actually buy an insurance with even 3,000 to 4,000 rupees a month.
Okay.
With that cost, you can actually have this entire portfolio.
Oh, okay.
Yeah, it's not that bad although. But in case you still have to, for any reason, just buy 1 or 2 right now and buy the others later. Your Mediclaim will be the first one.
Right.
Your disability due to accident will be the other one.
Okay.
And a term plan. So, theoretically speaking, it is not, you can grade them, but practically speaking, you need to have all of them in your portfolio because all of these 4 policies are extremely important.
Absolutely. All right. But I do want to talk about one very important aspect that I think is very important from the perspective of a buyer, right? The fine print is something that everyone is very averse to and gets scared of. As somebody who is advising, how do you contend with that? How do you suggest that people contend with that? Because they miss out a lot of the important stuff by saying, I can't read through all of this. I'm just going to trust the investment advisor or the insurance provider.
So, Alex, interestingly, the regulator has come out with a document called Most Important Document.
Right.
So you will have one, a 2-pager which says that what are the basic and the most important features in your policy.
Right.
Now, that is there in every insurance product. So at least you will have to make that much effort to see what you're going to be covered for, what are you going to get paid for, and what you're not going to get paid for.
Okay.
So I think this is a basic responsibility of every policyholder to do, is that, it's a very important document that you're signing. So first and foremost, to begin with, please make sure that you see the proposal form that you're filling in because that is becoming the basis on which you're going to be given a cover.
Right.
So if anything is filled incorrectly on that form, the policy has been given based on that information, which means the insurance company is entitled to reject your claim if that information is incorrect.
Correct. So when it comes to health insurance, there are certain preconditions that you have. If you have certain illnesses already when you take the policy, all of these...
You're duty bound to mention that on your proposal form.
Yes.
And if you have not filled those details, in most likelihood, your claims will be rejected.
And then there's the whole concept of certain illnesses that don't fall within the purview of an insurance policy, right? So you need to be aware of all the fine print.
So these are essentially very basic information, and a policyholder just needs to spend about 15 minutes on this.
Okay.
So first is fill the form correctly. The other part is just read through the brochure, and you don't need to, you may not want to get into the policy wordings, which is a very large document.
And it's all in legalese. Unfortunately.
Unfortunately, yes. But as I said, then what does your policy cover? It's a 2-page, simple page.
Right.
So begin with that. And then start making references to policy wordings in case you want to go into the details. So understand what the insurance company is going to give you and what it is not going to give you.
Okay.
So these are basics which a policyholder can start with. I'm not expecting a policyholder to understand the policy features completely. Everybody is an expert in their own field.
Right.
So not necessarily if you don't understand, which means they're doubting your intelligence. That's not the point.
No, of course not.
But let's just understand that what you're going to be covered for and what you're not going to be covered for.
But I think, so Harsh, the bottom line is that you need these insurances. And like you pointed out, it doesn't necessarily have to be very expensive if you plan it out well. And you just need to read through the brochure to ensure that everything is in order. It's not as difficult or scary as people make it out to be.
Absolutely. It's only about spending some time on it. It's just that you should be motivated enough to understand. I'll use this as an example to make people understand. If you were to fill a claim form, if suppose you were to claim money from somebody, from a government organization, where you were to fill up a form which said that there is a 1 crore There is a 1 crore benefit to be taken. So how carefully would you fill that form?
No, very carefully.
You will not want to make mistakes in it, right?
Yeah.
Similarly, if you're taking a travel allowance from your employer, which is just about 50 rupees, and there is a 1-page of form, you will just possibly just very quickly fill in it without, even if there's some wrong information, doesn't matter. Right. So the attention that you pay for a 50 rupee claim versus a 1 crore claim, there's a difference.
Yes.
So what apparently policyholders do is, if you're paying 7,000 or 10,000 rupees as premium, the importance they give to that document is worth that 10,000 rupees. But they don't realize that document that you're filling is worth actually 1 crore of claim.
Yes.
So please look into that form as if it's a 1 crore related document that you're filling. And any mistake you're filling in that form can actually jeopardize the entire 1 crore that you will get.
Yes.
Now, how much importance are you likely to give?
No, absolutely. You have to give it the importance that it demands. A final question to you. There are several policies that are being introduced by the government in the space of insurance. How do you rate them, and should somebody consider going out and getting them?
Yeah, actually, it's one of the nicest things that the government is doing, because insurance is the best product it's a best man-made product.
Right.
I mean, this is something that we've created ourselves for the benefit of people, for benefit of each other as humanity.
Yes.
So insurance is one of the, as I keep saying this, it's the best man-made product ever made. Okay, so if government is introducing these products for the benefit of the lower socioeconomic population.
Absolutely.
So all those people who cannot be formally into the system and buy adequate insurance, I mean, of course you will want to do that.
Yeah.
But talking about your listeners, I mean, if you're talking about whom we are addressing to or talking to right now, I mean, what I would suggest is that please make sure all the people who work with you.
Yeah.
So they could be your drivers, they could be your domestic helpers, they could be your staff, they could be your office boys. Just make sure that you guide them at least to subscribe to these policies. Even better if you can pay the premiums for them.
Absolutely.
Because it's a very small premium. We're talking about the Pradhan Mantri Jeevan Jyoti Bima Yojana and the Jeevan Suraksha Bima Yojana. These are 330 rupees per annum and a 12 rupees per annum for a 2 lakh cover.
Correct.
So, I mean...
And that makes a huge difference for the strata of society that we're talking about.
So, at 350 rupees, you have a term plan of 2 lakhs and you have an accident insurance of 2 lakhs.
Right.
At a annual cost of 350 rupees.
Right.
So, these are the things where probably, some people can take this as an initiative and pay for and insure the people who at least work for us.
All right, so the bottom line that I take from this conversation is that insurance is an absolute must, but you need the right insurance product. Thank you so much, Harsh, for joining us on this conversation and providing the perspective that you did provide us today.
My pleasure, Alex. Thank you.
I hope that this conversation helped you at least take the first step towards finding what you need. That's all for this conversation, but there's a lot more coming up in just a short while. Watch the space for more. This is Alex Matthews signing off. Happy saving.
If you enjoyed Big Decisions, check out some other podcasts on the IVM Podcast Network. You can check out Paisa Vaisa, hosted by Anupam Gupta, Advertising is Dead, hosted by Varun Dugirala, the Ronnie Screwwala podcast, hosted by Ronnie Screwwala, or Cyrus Says, hosted by Cyrus Procha. These shows are available on the IVM Podcast website, app, or wherever you get your podcasts from.
Janice, what do you think couples did before TV was invented?
I don't know, go for walks on the beach, long drives, fancy dinners, have more sex maybe?
But what did we do when we decided to move in together? We debated between the Chromecast and the Fire Stick.
We gave up on sleeping early so we could stay up watching true crime shows.
We got ourselves 3 cat babies.
And basically became the cutest couch potatoes around.
Okay then.
In case you guys still haven't got it, we are a TV crazy, Netflix loving, binge watching Mr. and Mrs.
I'm Anirudh Guha.
I'm Janice Sequeira.
And if like us, you snort TV for breakfast, lunch and dinner, this is the podcast for you.
Tune in every Thursday on the IVM Podcast app or wherever it is that you get your podcast from. This is
Mr.
and Mrs.
Binge Watch.
Look! Up on the internet! It's a meme! No! It's a cat video! No! It's the Geek Fruit Podcast!
That's right, we interrupt this riveting broadcast to tell you about our show, the Geek Fruit Podcast, where Tejas, Dinkar and I, Jishnu, talk about everything in pop culture, including DC, Marvel, Star Wars, Netflix, and everything in between.
You know how your friends hate it when you ramble about some nerdy crap and you just want somebody to listen to you? Well, sorry, there's nothing we can do about that, but come listen to us ramble and it'll almost be like the real thing. Kind of.
Listen to new episodes of the Geek Fruit Podcast every Monday and the Geek Fruit Bulletin every Thursday on iTunes, Google Podcasts, the IVM app, or wherever you listen to podcasts. Happy listening, you nerds.